Welcome to another episode of the First Fruit Stock Club. Excellent. I hope you guys have had a great week so far. We're at Thursday. Tomorrow is Friday, and we're just gonna start naming Friday First Fruits Friday. That's what we're gonna start doing. So, have a show for you guys today. Let me just get into the quick disclaimer. All right. Make sure this mic is on. All right. So the information provided in the First Fruit Stock Club podcast is for educational, informational purposes only and should not be considered financial, investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks carry risk, including the potential of loss. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge you are responsible for your own investment decision. Man, like I said, I hope you guys are having a good week, man. I This week could have been better. It's the start of the football season, and as you know, by my hat, you can see that I am a Ravens fan. I'm a diehard Ravens fan. Right, I've been a Ravens fan since they were at Memorial Stadium. Right, when we had the uh, semi-pro team or whatever. So we had to prove that we could have a team. But anyway, since it's football season, I decided to do a football theme, right? And today's main theme is what is your financial depth chart? What is your financial depth chart? All right. So, man, every year, coming towards the end of the year, we have to kind of reflect and we have to plan, right? We have to plan for end of the year. We're already at September, right? October, November, December. So we're basically almost in the last quarter, and planning has to be done, especially financial planning, right? Have Has to be done to prepare us for the next year of 2026. I know this year has been a crazy year. This year is going to go down in the history books, but we still have to plan for 2026. And a great time to start is right now, right? Going into the last quarter there are some things that we probably need to tighten up, some things I'm going to tighten up, and probably some things you could probably tighten up also. All right, so let's just have a quick discussion about those things. So first thing is giving, right? This is the First Fruit Stock Club, and I'm all about giving your first fruits away. And I'm all about giving your first fruits away. And I believe that it is the beginning, right, to all we have, right? So just for the fact of if we can't give, how are we going to if we don't have enough money to give, how are we going to invest? Right? Giving is a prerequisite that I think, right? So we if we can save, because like I said, this economy is set up for you to spend all your money. But if you have enough awareness to you where you're saying, look, this is not going to happen, and you can give, 5 to 10% of your income, then you're really ahead of most, right? So once we get past the giving stage, right, we move to tax planning, right? We have to tax plan, and giving is a part of tax planning because giving is a write off, right? We don't want that to be the main thing we give for, right? We want to give because we want to help others, but financially, it's a smart decision because it's a write off, right? So tax planning, deciding, what giving monies away for charity, um, It's smart. But tax planning, getting all your receipts, all those things together. No, we're not even there yet. And we already at tax planning, right? So, but getting all those things together, one thing my CPA, when I meet with him, he always sends me this spreadsheet and it's like, what is this? So me getting ready in my mindset and have to go through this spreadsheet. I don't have as many expenses. Like I said, I sold my real estate portfolio. I used to have a whole lot of expenses that I was writing off. And actually I had a very active bookkeeper that would help me every month. But because I don't have the real estate, I don't need it. And the bookkeeper to be active in my accounts uh every uh every month. But um that's something that's definitely I probably could put that on the list of part of your financial depth chart, right? And in football, the depth chart is about the positions that are going to make the team successful and who is first and what position, right? You have, of course, you have your quarterback, you have your starting quarterback, and then you have your second string, and then you have your third string, right? So I think I listed these things in order of depth chart importance to me. You can decide how important they are to you. All right, so tax planning right now, like I said, it's a good time to start tax planning, looking at expenses, looking at write-offs, and looking at giving, which is a part of tax planning, like first fruits, right? All right. Next thing. All right, I don't want to drag this on. Savings, right? We're coming to the end of the year, coming towards Christmas time. We need to probably have a plan for Christmas, how much you're going to spend, for that time. And it's a little bit harder to save towards the end of the year because of Christmas, but it doesn't have to be. You can just decide on an amount that you're going to give, and then that's it. And then everybody else gets thank you cards or whatever, or Christmas. You don't have to buy anybody, get into that American consumer thing where you're out buying a lot of Christmas presents. No, you have your amount set, and that's what you're gonna do, and then you'll give away, and everybody be fine. They won't. It be what it is. It's okay. All right. So and investing, definitely one of the important things to do. But if we set up the other things, then it becomes an easy thing to do, right? If we're giving away, that means that we're giving the money away. We're planning for our taxes, and right, and come tax time, if we get a return, if we don't, that's fine. But if we do get a return, that return is probably also due to some of the giving you've done throughout the year, right? But having the cash available at the end, at the end of the year, or even having it available next year, and having the cash available now in September. And I think next week is going to be a week that we will all get opportunities to buy some stocks at discounted prices. I could be wrong, but I'm like I said, we're always invested, but I'm probably less invested than normal. Usually around this time, I take some profits off the table. But investing, having money available, invest, all those things tie into that. If we can give, then we can invest, right? If we can save money, then we can invest, right? If we prepare our taxes, then we have more money at the end of the year that we can invest. It all works according to one, right? It all works down this way to investing is what we want to do. All right. And makes it a little easier for us. So that is it for the financial depth chart: giving, tax planning, saving, and investing. Now you can put it in what order you have, or you may have a different finance. You may own a business or whatever. Whatever it is, you should have a financial depth chart that you're putting together right now, right, to prepare yourself and take yourself for the planning to the end of the year and to the beginning of 2026. That's in that. All right. All right, let's get into the stock market. All right, so the Dow Jones and man, the stock market has been on a tear. Okay, man, it started out last Thursday, end of the week, down. But since and probably since the last few days, and this is the outlook of a week, right? The Dow Jones Industrial Average has been up is up 403 points, right, since last week. The S&P 500 is up 61 points since last Thursday. And I'll do it on a weekly basis, right? And the Nasdaq is up 204 points. The stock market has been on a tear. That's why you should always stay invested. Even though we're going to be a little bit cautious during this season, but we're always invested, right? We're always looking to put money into the stock market. We're always looking while we go to work. We have, excuse me, we have somebody working for us, right? And that is all the employees that work at these companies, right? They're working for us to create the returns we need in our portfolio, right? So it's not, so now our ratio changed, right? It's not a 1 to 1 where I work, I earn. No, I work and all the companies and the employees and the companies I own, they work. We're working together. I give them capital, right? They give me return, right? And it's a great, wonderful, and beautiful union that we have with my portfolio and my income, which I try to put as much of it in the stock market as possible. That is the goal. That is often the goal, right? That is the goal that we want to have. All right, next, Oracle. Man, Oracle has been on a tear. Okay, Oracle's been on a tear. But you see, you can never get too excited, especially when a stock makes a new high, because what happens is once when it makes the new high, then the people who had it will sell, right? They'll exit um some of it. They may not exit all of it, but they're going to take some profits, right? Normal. I did not own Oracle. Oracle has been on my watch list, but I don't own Oracle directly. Maybe in my and some of the ETFs that I have. I decided to do some research. I know a little bit about Oracle, but I wanted to do some research about the company to give you guys some more information. So, and I'm not going to drag it out. I'll kind of just get to the nitty gritty. All right. So, Oracle, um, founding is founded 1977 and 1980. Founded as Software Development Laboratories by Larry Ellison. If you don't know who Larry Ellison is, I think he's now moved to the richest man in the world. He just overtook Elon Musk. Um, and Bob Miner, I never heard of him, and Ed Oates, are the founders of Oracle. So the name was inspired by a CIA project codenamed Oracle. They built one of the first commercial relational database management systems. In 1982, the company officially became Oracle Corporation. So, in the 2010s, it had a cloud transition, right? It saw the rise of Amazon, AWS, Microsoft, Azure, and Google Cloud, right? Cloud is really big right now because think of the Internet of Things and AI. All these things are running in the cloud, right? And you have the big gosh, I can never think of the warehouses that are for the databases that they're having. So pivoted to from pure database licensing to cloud subscriptions. Launch Oracle Cloud Infrastructure to compete in cloud computing. Face challenges catching up, but carve niches in a database and enterprise apps. So, man, so what's working for Oracle right now? I mean, as you see, and the last one is the most important. So, cloud plus AI tailwinds are real. Oracle's cloud revenue, SaaS and ISAT, rose 28% year over year in Q1 fiscal 2026. Expected, right? Infrastructure as a service alone is up 55%. That's big growth. and remaining performance obligations (RPO) jumped 359%. This is what really got investors excited year over year to 455 billion. And that's a huge backlog of contracts. So remember, the stock market is all about expectations, right? It's all about expectations and what they expect. And the market is saying they're expecting because of the future contracts that it has, that is saying that Oracle price is undervalued right now. So that's why the price rose as it did, right? Now, but what happens, like everyone gets excited, they try to jump in. And then the people who have been Oracle shareholder for a while decide, hey, look, it's time for us to take profit from some of our shares, or traders or whatever, they're taking profit. So if you want to get an Oracle, it's probably a good time. I mean, a you probably want to wait a few days, let the news settle. I say probably um, maybe wait a week or two if you want to add to Oracle. I'm still deciding whether I want. I probably will add. I probably will add Oracle to maybe my long term portfolio, as well as maybe put some options on Oracle. Um, maybe definitely not next week, but sometime uh, early October, maybe is what I'm thinking. After the stock gets settled, I think will be a good time, and a portfolio will grow. Look, I want to tell everybody I've just launched my free school club. All right, totally free, 100% free. Right, so it's just a strictly community. We're gonna go and I'm gonna come in there. We talk about stocks. I do have a base portfolio um, that I try to I'm going to post it in the club, right? And also just getting more information. I'm only on here for a few minutes, but there's a lot of things that go on throughout the week that I want to share. And then those of you who are investors already and you like, you want to share and discuss what you have, and what you think that's so it's a free school club. It's in the link. Look in the link in the show link and the show title. You should see it. It's also in the body. I'll put it in there. So look, just join. It's totally 100% free. No upsells, no anything. Just come in, get some information. I'm in there. Maybe at least once, a few times a week. And just when I see something that's good information that could benefit you and your family, I'll post it in the club. All right. So yeah. So stock market, like I said, I'm cautious, um, optimistically cautious on the market, right? I think it's a good time. This week, like I said, just take some more profits. Not everything, but take some profits off the top while the market is rising. And I think within next 2 weeks, the market's going to give us some opportunities. It might not be life changing opportunities like in April, but they will be opportunities, right? So, man, thank you guys for giving me some more of your time. And investing is definitely not, it's not entertainment, but it's important, right? It's important. It's important that you have your finances together, and we go into 2026 at a new in a new position, right? Right? Maybe we didn't start out investing. Maybe we just got into it, but is good to start now and start strong, right? We start now that we can start 2026 in the right foot. But it's all about what you do today. Tomorrow is Friday, right? First Fruits Friday. The first dollars, right? The first dollars, not the second dollars, not after you. And I know it's hard, but the first dollars, if you get in a habit of using those first dollars when you get paid, and put those dollars, those sacred dollars, into investments and giving first, and you'll be fruitful. All right. And I say thank you again. And man, you and your family, everyone, have a great, successful rest of the week. And once again, be until next time. Thank you.